Only 1% know this wave exit strategy, guys. Okay, so the secret to bigger profits in trading is not how actually you enter, but how you exit. Because if I give you my strategy and we give our strategy to like multiple traders, they will end up in different results, all because on how they execute that strategy. The market doesn't reward good entries most times, it rewards exits. So it rewards smart exits, because let's be realistic. When you enter the market, yes, the P&L can be floating, even though the market can be in profits or it can be in loss. But eventually, if you close in profits, that actually means you end up making money. But if actually you lost the trade after being in profits, you've lost it. Okay, so at the last, now take home depends on the last click, not the first click. Okay, so your last click will determine your take home. So the most important thing you need to understand when you come to your strategy is this: having identified your edge. After you've identified your edge in a trading, your edge as a result of what actually you look out for before you eventually click that buy. What do you look out for before you take that buy? For us as a wave trader, we are looking out for what? An impulse. We wait for a correction to play out and we're taking the next impulse. We wait for a correction to play out and we're taking the next impulse. Okay, so it depends on what the market is doing when you came into the market, but we're going to use BTC to illustrate this point today. So assuming the market is just here and you entered from here, the market came here. Now, to some, they will not want to close at this point because they believe that this market will definitely give them 5-wave impulse correction, impulse correction, impulse. Then coming here. Now, it depends on the strategy they are playing out. If the market is here and you don't want to take profits at this point, by the time you start retracing, the amateurs will start like, okay, maybe assuming from at this point your profit is already $100. By retracing here, it has eaten deep your profits, maybe $50, and you're okay, oh my goodness, from 100 to 50, and you now close here and you watch the market do like this. Now, the person that actually entered here and did not take profits at this point, we end up making like $200 at this point, but eventually you end up making what? $50 at this point, all because you did not have a good strategy. Okay, your strategy very good, you know how to enter the trade, but you don't know how to what? Exit the trade. So that is why your plan, identifying first of all, what kind of trader are you? Are you a scalper? Are you a swing person that can hold a trade for a long time? Not everybody can hold a trade. Let's be real. Personally, I don't like holding a trade, especially when the market is going against me. All right. So, and that is why I take a trade and I have a target. Okay. 1:2. And once the market comes there, at least 1:1.9. So for you to be a profitable trader, you must master your exit. So most traders leave 50% of their profits on the table, all because they exited wrongly. Okay, so my strategy of exiting the trade might not be your strategy of exiting the trade, but one thing is common. You can never get it wrong taking profits. Yes, with a clause. Now, that clause is this: you only need to be ruthless in executing your strategy, because I have seen majority of traders, especially all these day traders, they are quick in taking 10 pip wins. Okay, if you are quick in taking 10 pips, all right, anytime the market gives you 10 pip, you are happy about it. Now, you should also be quick in taking losses. 5 pips, 10 pips, you are out of the game, because you know that, all right, you are quick in taking profits. So if you don't balance the math by being quick in taking losses, you will bleed your account. So how do you exit a trade as a wave trader? All right, so how to exit a trade as a wave trader is must first of all understand structure. So the first thing you need to master is structure. And what are the structures? There are basically 3 structures. Now, the first one is a 3-wave structure. We have an impulse, we have a correction, we have an impulse. This is a structure. And the second one, we have an impulse, we have a correction, we have an impulse, we have a correction, we have an impulse. So you must know that this exists, okay? And secondly, you must tell yourself, I am only going to exit a trade after the structure is completed, after the wave has formed. So that means if you enter the trade here and this is your first impulse, you wait for this second impulse to play out. And once this impulse completes, because you might not know, it depends on where the market is. Where the market is at the main time, it might give you this to take this again. So you'll be exiting at this point. But the best way is to understand the bigger picture of the market. Then you can ride the trend. Because most times, anytime the market gives you this 5 impulse here, what it normally does, it gives you a bigger correction to continue pushing high. All right, so that's why you need to first tell yourself, I will only take exit anytime I see 5/5 wave. And in this video, guys, I'm going to show you the simplest entry and exit strategy, okay, anybody can take when trading wave analysis. So believe in me, this is the 2 basic patterns, the 2 structures that every market follows, irrespective of the instrument that you are trading. So let's dive into the 3-wave structure. The 3-wave structure most times are seen in corrective move, okay? In corrective moves like the flats, the triangle, you see 3-wave patterns there. And the 5-wave patterns are also seen in trending, okay, in impulses. But most times you see 3-wave pattern, 5-wave pattern in corrective move. And I'm giving you these guys for free. Anytime you see a 5-wave pattern in the corrective move like this, I have 1, 2, 3, 4, 5. Anytime you see this 5-wave pattern in the corrective move like this, it shows a complete structure, and most times the market is set to keep pushing high again. All right, so we can let's take a quick look on what just happened in the market. Let's use a BTC for example, because most of us are trading BTC. So take a look on what actually happens. What can you see here, guys? Now, what we have this impulse down, we have this corrective move up, we have another move down, we have this corrective move up, we have another one. So where can you see? We have 1, 2, 3, 4, 5. So this is a running flat in between. So this is a complete structure on its own. And what did the market do after which it started pushing high again? Okay, the market started pushing high. So telling us that this is completed already. And as a wave trader, what we always look out for is that completion. Once you see this, we see this, we see this, it's a confirmation that this trend, this move is already completed. We call it double trade. Okay, double trade. Now, we also have this. Now, watch out what the market is doing again. From this point here, we can see that this market also is giving us an impulse, correction, impulse, correction, impulse. In other words, 5-wave. And what has this 5-wave done? It has broken this high. So I'm telling you for free now that BTC, even though it just broke the all-time high, the momentum is not strong. So what we'll be waiting for is for the market to give us a corrective move here and a drop. So BTC, we expect the BTC to keep dropping from this point, all because the strategy we are trading has shown us that the market has actually given us a structure. So this 5-wave move here is a structure that we trade. So we can see that happening all over again in the market. So if you can adopt these simple techniques and start trading these simple techniques everywhere you see this happening. Now, let's take a look on what happened previously. You can see that here for free. We have an impulse, we have a correction, we have another impulse, we have a correction, we have another impulse. How many waves are these? These are 5-wave. Okay, 5 waves, and the market what? Keep pushing high. What do we have again? Impulse, correction, impulse, correction, impulse. Textbook patterns, guys. Textbook patterns. So these are just the simple form that we keep identifying the wave setup. As I said earlier on, that is all about how you exit. That means whether you make money or you lose money. Anybody can enter a trade, but only the 1% knows when to walk away. So the essence of this video is for you to stop panicking, okay? To see the end before you even start, all right? Exit like a pro and watch your trading life change, because that is just the way it is. You need to see the end before you enter, because this is a game of probability. If you jump, and most newbies, they will just, maybe for instance, you enter a buy here, they will enter a buy here and exit at this point, because they don't know that this actually happened. They will exit at this point and they will enter a sell here. They will get punished because they don't know that they can't read the writing on the wall that this is a complete structure, and at least we're expecting this market to break this high, at least for the first for the main time. All right, for you not to be getting punished because you don't know how to exit or leaving money on the table, you need to understand the wave patterns, because it's only the wave pattern that can tell you what is yet to happen. Most times support and resistance might not even tell you the real picture of what the market is doing. I can go on and on to tell you exactly what we are watching out for. Now, this happens irrespective of the time frame. If I should go down to smaller time frame like 15 minutes, let's go down to 15 minutes. Now we have an impulse, correction, impulse, correction, impulse, the same 5 waves. And at the end of 5 waves, what do we have? Impulse, correction, impulse, correction, impulse, the same 5 wave. What do we have? The market start again, impulse, correction, impulse, correction, impulse, the same 5 waves. There are 5 waves all over in the market. So your job as a trader is to identify complete of these 5 waves. So how do you calculate these 5 waves? You calculate them. For you to get it right, you need to first of all understand the patterns, because most times they don't come in clear forms. All right, they don't come in clear forms. Like we see here, this is an impulse on its own. We have a sharp move here. We have this, we have this. So here we can equate this to be what? A running flat. So we have an impulse, a correction, an impulse. Here, a correction and an impulse. So this is where the 5 wave ends. All right, because this was a correction on its own. All right, so this is just how it is. So have the picture in mind before you enter the trade. Know exactly where to exit your setup. Now, if you're comfortable in taking a quick win, that's good. Also, remember that you need to balance it by taking quick losses. So when you combine your psychology with wave structure, you will also have a consistent profit. So ride the waves, but always step off before it crashes. It's not about catching every pips, it's about catching the right pips. I believe you have gained something in this video. And if you like this kind of content, don't forget to subscribe, don't forget to like and share with your friend. See you in the next video. Thank you.